Good morning and welcome back to Almus Market Mornings. Data and events are the fuel that fire a trader's appetite, as often these traders form opinions and express it through their positions. As we discussed earlier, the shutdown resulted in the lack of data coming out of the US economy, but for a change, we got the familiar Fed minutes yesterday. So, Fed minutes did express the story of the dot plot along with what we have been discussing on this podcast, and that's the divergence in views. While the rate cut camp has ample supporters, 7 out of the 19 members also project no additional cuts for 2025. Another event that's catching attention is the Israel and Hamas agreeing to release all hostages. President Trump has said both parties have signed off on the first phase of the peace plan. Good morning, JK. Seems gold had a token correction today morning. Maybe it's just the nature of the rally that it's again showing some sort of a recovery. What are your thoughts on these updates?
Good morning, Swaraj. Yes, I think the gold possibly seeing little bit of profit taking after the announcement by Trump about the first phase of the agreement being executed between Israel and Hamas. There will be some hostages that will be released in the coming days. The list of hostages to be released is also shared. Once it is agreed by both the parties, it will start happening, and then Israel will also start withdrawing their troops. So it is a positive development. Of course, people will keep their fingers crossed until it actually happens. But from the reaction from the gold market, it does look like there is some sort of a conviction that this is going to happen. And secondly, the gold itself has been moving so much in one-way fashion that some sort of a correction at some point was very likely. Now, yesterday it has reached as high as $4058 dollars per ounce, and back at 4020 is only a modest correction. And now the bull trend is very much entrenched. In fact, yesterday it was the turn of the silver to move towards its multi-year high at 49.60, almost eyeing the 50 mark. So the bullishness still remains. Intermittent corrections are definitely possible because of the positioning in the market. And also, don't forget that the US shutdown is still going on. And the longer it proceeds, bigger will be the challenge for the economy. Estimates suggest that every week it is shut, 15 billion of output loss is there for the US economy. So that's how it is. So that's where the euro, gold and silver stand on the cusp of a small correction, nothing more. FOMC minutes did not show any surprise. If anything, it highlighted that the divergence in the views is persists, and there is a dual risk that the members are looking at. The employment situation likely going bad. At the same time, there is caution about inflation resurfacing. So while overall tone of the minutes was dovish, cuts are unlikely to be aggressive or too front-loaded. It appears that Fed wants to preserve flexibility and avoid overshooting on the rate cut side. The cautious language and the repeated references to balance of risk suggest that path the path is going to be an easing, and it's not going to be a sprint for the rates. And of course, yesterday from other regions, we have had some quite sober numbers, like German industrial output plunged by 4.3% month on month in August, from a 1.3% month reading in July. Over the year, industrial production is down by almost 4%. Manufacturing is taking a big hit. And now it is actually the industrial production in Germany is still some 15% below pre-pandemic level as well. So overall, this follows the weak orders data that was published on Tuesday as well. So the month data so far published suggests that the risk for yet another quarter of contraction and an outright technical recession in the economy is quite real. So euro continued to be under some pressure. In Japan, one of the key members of Bank of Japan said that rate hike this year is difficult. heightened inflation expectations and underlying inflation could provide the spark, but the weak Q3 GDP has led to some opinions gaining ground that this year the rate hike may not happen. So as I said yesterday, market is continuing to unwind the bullish bets on the yen. In fact, yesterday we had even seen a foray above 153 for the USD yen. And I think if you look at the charts on the USD yen, it's very clear that at least 155 will be seen. Of course, we will also look out for the statements from officials protesting against one-way moves in the market. But if it is going to be an orderly movement, I don't see why yen should not weaken further. If at all, a contrary view has to emerge, there has to be an actual intervention by the Bank of Japan. That at least nobody is talking about it right now. You can see that carry trades have begun once again, and particularly against high yielders like the Mexican and Mexican peso and the South African rand and the USDN, of course, because US is still offering a very good yield, nominal yield at 4.25%. So overall, dollar is quite resilient in the last few days, almost rising, more than 1.5%. And then yen, of course, has risen. Dollar yen has, of course, risen more than 3.5%. Euro is finding strong resistance at 1.1650 levels. 16 is proving to be some sort of a support, but considering the overall atmosphere of short covering in the dollar, I think that is very likely to break, although the underlying trend is not going to change for the dollar. So stock markets also proving to be quite resilient, even in the face of continued shutdown, which has now entered the ninth day. I think market is more looking at the continued spate of AI investments. Every day, some new announcement of a big deal is coming through, and of course, the Q3 earnings that will be starting in the next couple of days. So, unless there is a big disappointment, I think stock markets are going to be at least steadier. I think market is right now ignoring other challenges that the economy is likely to face. So I think it's a steady market, slight dollar strength, and the rupee again a very narrow range. I can only say that the narrow ranges eventually lead to big moves. Considering the fundamentals that are in play, move could be on the higher side. But what is not known is how much progress is being made on the trade side. So there are reports indicating that democratic legislators, quite a number of them, have put in a petition to the president to unwind the big tariff imposed on India, and also to see that the relations between India and US is improved. So not sure that president will respond to this, but definitely there is some sort of a political pressure also on this side. So unless we see some strong, real progress on this side, rupee is not likely to move much away from the current levels, because central bank is standing very much at 88.80. So on the face of it, rupee definitely looks resilient at this level, but we need to watch developments going forward.
Thank you, JK. And I think it's the time has come to take out the umbrella, because narrow ranges precede larger moves. So we have to be prepared for the volatility up ahead when it comes to rupee. We yesterday traded in a very narrow range, so that's something to pay heed to. Overall, dollar is also quite resilient in the last few days. Euro is finding support around 1.16, but 1.1650 is finding some strong resistance. Given the extent of the move, maybe there may be a foray below 1.16. BOJ members are saying that rate hike is difficult this year. I don't think that's a surprise. They have been trying to delay rate hikes for quite a while now. The yen, the bullish bets on the yen are getting unwound. Yen also briefly moved 253 levels against the dollar yesterday. Overall, the first phase of agreement on the Israel-Hamas conflict also seems to be a positive geopolitical development. Uh, uh, Gold and silver, which have been moving in one-way fashion, there can be some sort of a profit taking before the trend resumes. The underlying trend remains bullish. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.